This conference will now be recorded.
Business consolidation with group reporting S/4HANA 2023. Today we are going through legal consolidation overview. Right? I will explain what is management consolidation, uh, ICMR, but main concentration how the legal consolidation is executed in the system. So let's take one example. I have 5 legal entities. Let's say Germany, one legal entity. Whatever you see in this square, this is basically one entity. Germany, United States, Canada, Switzerland, France, and also some investment relationships. So Germany invested in US something around 100%. Germany invested in Switzerland 100%, and US invested in Canada 35%. Switzerland invested in France 75%. So normally, uh, consolidation and aggregation, there is a difference. Aggregation is basically, if you see in BW, if we want to aggregate some profit center data, different profit centers we select, and the entire system, the columns going to show the cumulated figure or aggregated figure. Yeah, so that's okay for sales reports or expenses reports, individual uh, uh, salaries reports, that's okay. But when it comes for consolidation, we have to consider entire financial statements. So all these financial statements, let's say Germany, United States, Switzerland, France, we need to consider 100%. So when I'm saying, I said only Germany, United States, Switzerland, and France. I I I, I skipped this Canada. Why? Because Canada is called equity method. So equity, because the US investment in Canada less than 100%, less than 50%. When less than 50%, we will not consider entire financial statement of that particular consolidation unit or legal entity in the group. Only the equity changes we consider. However, so German investment in US 100%, so United States, Germany, even this 100%, Switzerland investment in France 75%. So all these four entities, 100% balance sheet, P&L statement, we will consider for the consolidation. So now you might understand the difference between uh, uh, consolidation and aggregation. So we will not aggregate these financial statements. From these financial statements, we will pick up the control data. When I say control data, investments, investments from investments in subsidiaries, right? So Germany's investments, United States investments, Switzerland investments, we will pick up. Capital or common stock, retained earnings, equity part, we will pick up from these subsidiaries. So let's say United States. So Germany invested in United States 100%. That means Germany is the holding company. United States, we call it as subsidiary. Same relationship. Germany to Switzerland. So Switzerland subsidiary. Switzerland invested in France. So in this particular group, Switzerland holding company, France is the subsidiary. So from the subsidiaries, we pick up equity like common stock, retained earnings. If you want, we can pick up other comprehensive income also. So that's called control data. So we eliminate investments from the holding company, investment in subsidiaries, we will eliminate. We will eliminate capital, retained earnings, equity from this particular subsidiaries, and we calculate goodwill, we calculate minority interest. Then we will generate a financial statement at World Group or America Group or Europe Group. You can see Europe Group, America Group, and World Group. So that's called consolidation. It's not only aggregation. It needs some eliminations. It needs some calculations like goodwill and minorities. Then we generate the financial statement for, and the financial statement for a particular group. When we see Europe financial statements, we see Switzerland and France financial statements. When we see at world group, we will see Germany, United States, Switzerland, France financial statements with eliminations. Yeah. So how this happens in the system? Yeah, that's what we are going to understand now. So I just go through. It's kind of a overview, right? I will take 15 to 20 minutes, right? So, but to configure this scenario, we have to spend some months time. So first, two roles, right? So what are the two roles? Switzerland, one local accountant will be there who is responsible for his financial statement, Switzerland financial statement. Switzerland is a company, yeah. So SW00 is a company, right? The company has a accountant, right? He is responsible for that local close. France has his own local accountant. And if you see Europe group, right? So Europe group, Switzerland and France, there will be one particular accountant. We call it as group accountant. He is responsible for the consolidation, legal consolidation of Switzerland financial statements and France financial statements. So two roles I said, local accountant and group accountant. In group reporting, what happens for the local close? SAP gave one screen, which is one app, which is called Data Monitor. In the Data Monitor, this Switzerland or France, their local accountants, going to perform some activities. So financial closing, you already know what are the activities to be performed after financial close. For the group reporting, we need some more some more activities. So for example, Switzerland. If you take Switzerland, what are the activities he has to perform? So Switzerland is a non-SAP system, for example, right? So if it is a SAP system, universal journal data, we should move to group reporting. If it is non-SAP system, then we have to use some CSV files to upload the opening balances and the movements. So Switzerland, that particular local accountant going to collect Switzerland data, and then he is going to calculate the net income in group reporting. Why he has to calculate the net income? So you know, right? So in FI, what happens? Entire year you post the transactions. When you carry forward the balances, system automatically calculates the net income and it transfers to the retained earnings account. So the same thing, when I load, consolidation happens monthly or quarter. So it's called consolidation frequency. Based on the consolidation frequency, consolidation happens. It might be monthly, it might be quarterly, it might be half yearly, yearly. Any frequency is okay. So let's assume we are doing monthly. So that month net income system should calculate. So he runs that net income. Once the net income is calculated, the system calculates the net income. We need to understand whether my balance sheet, Switzerland balance sheet, the user has to, the local accountant has to understand whether whether the balance sheet is matching or not. How we can check balance sheet is matching or not? Assets plus liabilities plus equity should be zero, or assets equal to liabilities plus equity. And also I can check whether my net income is calculated and transferred to retained earnings or not. So we have some validations, and also they can have some generic validations, like whether their asset value is greater than accumulated depreciation or not, right? They can have some more validations. So after running the validations, once he's satisfied with those validations, the data is in local currency. Switzerland data is in local currency. So euros, right? In the local currency, if the local accountant wants any adjustments, manual adjustments, As I said yesterday, gain on asset sale, I want to post it to other income. It's a rare posting, one or two times yearly, yearly once or twice we post. So those manual adjustments he can post in local currency. Once he once he completes those postings, he's going to the local accountant is going to run the currency translation. Why? My group currency. See, Switzerland currency euro, France currency euro, USA currency is USD, Canada currency is Canadian dollars, Germany currency is euro. So when you want to consolidate, all the currencies should be in one. All the currencies, they should have some common currency, which we call it as group currency. So Switzerland, so the group currency, let's say for all these groups, group currency is USD. USD. So Switzerland local currency data should be converted to USD. So to convert to USD, we follow some process like balance sheet. We divide it into non-historical, historical accounts. The currency translation differences posted to a separate currency translation reserve account, non-historical accounts, the currency translation difference posted to the same account. So we have some formulas, we implement the some formulas that particular local accountant going to run the currency translation. With that, is this Switzerland data ready for consolidation. So all those tasks, whatever I explain now, happens in data monitor. So let's see where is this data monitor. So consolidation data preparation. First, you have to set this global parameters. So what are these global parameters? So for example, I might have different accounting standards for this consolidation. For example, I want IFRS based US GAAP. So first I have to select. So I have to inform the system that I want to do the IFRS consolidation. And you have to select for what period you want to do. So for example, 2023 December, I want to perform the consolidation. So first you have to set the global like set controlling area, which sets the controlling area based on whenever you create cost center or profit center, it takes that particular controlling area. So the same thing. So here you can see the data monitor. In the data monitor, whatever tasks I explained, you can see this is my structure. So whatever structure you see here, right? So Europe group, Switzerland and France. You can see Europe group, Switzerland and France. America group, you have United States and Canada. And America group, so you have America group, you have US and Canada. And in the world group, you have all the countries, US, Canada, France, Switzerland, and Germany. So you can see the task to be performed by the local accountant. So when I'm see for example, it is showing all those entities and groups. So I'm responsible. Local accountant is responsible only for one consolidation unit. So you can pick up only that consolidation unit. So based on authorization, it works. So now you can see for this particular Switzerland consolidation unit, I have to perform all the local accountant has to perform all these tasks. We call them as tasks, right? So data collection. So here is going to collect the CSV files. He can right click on this. You can see the test run and update run. He can test it. Then he can click on update run. So when he clicks on update run, so he can select the data file. And when he execute this data file, it's going to load the data. When you are executing, you have upload method, physical file name, all those things you have to mention. Then you have net income calculation for the particular Switzerland consolidation unit. You can see calculate net income. So you can right click and calculate net income. So when you click on net income calculation, it basically so consolidation group CZ00E. So you can calculate the net income. You can see here retained earnings. It automatically calculates 76,995. 1 lakh it posts to the P&L. So 799,000 is a P&L account. Other leg it posts to the equity. So 317,000 is an equity account. So once we calculate this once he calculates the net income, then he can validate the data using this reported data validation. So this validation executes for whatever you define for that particular legal entity. So this validation basically tells whether your balance sheet is matching or not, whether net income is matching with your equity net income account or not. So these things it is going to execute and it is going to show a report on top of that. So it opens the log here like this. So here you can check whether, see here, it is success, right? So here even he can add a comment also after completing this version, this validation. When you go inside, you can see what validations it's executed. You can see, so first validation, assets, liabilities and equity. Second validation is net income. So left side value, right side value, its comparison is equal to. So once the validations are complete, then any manual postings, right, he can execute. So manual posting in the sense it's kind of you have manual journal entries in FI, right? So FB50 or that post general journal entries app, right?
Approval
Same way,
difference.
yeah, correct. So same way here we have post group journal entries. So these journal entries, it's going to post in group reporting, not in FI, universal journal, right? Any adjustments on top of your universal journal data, so according to your group reporting policies, so those are posted here. You can select the document type, you can select the consolidation unit, you can give the line items here, the local accountant. So then you have currency translation. So currency translation, you can, so if your local currency is different from the group currency, currency translation is applicable. If your local currency and group currency both are same, no need to run the currency translation, because my local currency is euro, group currency is euro. So how system understands the group currency? I have version U00. When I define this version, I define that for this version group currency is euro. So when both are same, system gives this red color line. That means the task is not applicable for that particular consolidation unit. For example, if I take US, so you can see US, this is applicable currency translation. When you run this currency translation, it automatically opens the log and it gives you the result in a log. So it opens the log. Now you can see the log. So USD to euro, my group currency is euro. So all USD values are local currency amounts are USD, group currency amounts are euros. You can see even it calculates this translation difference based on the reference amount. So once it completes, right, even the group currency data you can validate. So earlier we validated, so that the validation is based on local currency. Next again you can validate after converting, after posting manual adjustments, after converting local currency to group currency, you can execute standardized data validation. That means validation in group currency. So all individual legal entities completes this process. Now the data is ready for reporting. I mean legal consolidation. So after completing this data, after completing these all these activities, so currency translation also completed, you can perform one individual application. We call it as intercompany matching and reconciliation. Intercompany matching and reconciliation. So what happens in the intercompany matching and reconciliation? So there is no dependency. So here understand, ICMR is a separate application which is applicable for FI and group reporting. In FI you do the ICMR based on operational chart of accounts based on company codes. In group reporting we do ICMR for non-SAP and SAP units against consolidation accounts and consolidation units. So this ICMR, we have a different app for this ICMR. So now ICMR performed by the intercompany accountants and local accountants. Intercompany accountant different, group accountant different, local accountant different. So the intercompany accountant will have access to whatever is responsible, whatever entities is responsible. So SAP delivered one app, manage reconciliation close. So he can go to this reconciliation close and he can select the pairs, whether he want to check accounts payable to account receivable or Switzerland to France or US to Canada. So you have different reconciliation cases. Based on the reconciliation cases, you can select the year which you want to check. So I want to check 01/2/2023. My version U00 I want to check. So when I go here, what happens? SAP introduce, see here, consolidation unit, partner unit. So between these two units, some intercompany transactions happen. Sorry. So some intercompany transactions happen, and those intercompany transactions, there is a difference. How much is difference? 4,481 euros difference is there, their intercompany transactions. Now the question comes, why this intercompany difference has come? So the group accountant or the intercompany accountant, right? Our intercompany accountant responsibility is to close this reconciliation, right? Same app, group accountant also can connect and he can check why these differences happen. So group accountant job is not identifying the differences. Group accountant work is to see the differences and to understand why those differences are there. So when we see here, if for example this Switzerland to France 5 euros difference came. Now I want to see, as a group accountant, I want to see why these differences happen. He can go to details. So here you can see the difference and he can click on this difference, navigate to reconciliation balances. So then system goes to the pairing. So consolidation unit, partner unit, what is the leading unit amount, what is the partner unit amount. And again, further he can drill down. He can go to transaction level and he can understand the reason why it happened. What is the reason for this particular differences? So once he understands these differences, right? So he can see, you can see this assignment number, it creates in the ICA document table, and he can check these items here, show items. He can see the items and he can see the new items also. All the details he'll find it here, and this is matched and auto assignment happened, all the reasons he can identify. So once this is the main app, financial close, yeah, manage reconciliation close. This is the app where IC accountant and group reporting accountant both going to connect and check the status. Why group accountant has to check this status? Because once this reconciliation close completes, then only he can run the intercompany eliminations. So Switzerland to France completed, France to Switzerland completed, right? So here you see it's still open. So the intercompany accountant, right? So he can connect. He knows this difference completed, and this is closed. So he can click on close. So the status shows closed. So once the group accountant understands, okay, these two, France and Switzerland, reconciliation completed, so he can start his group legal consolidation activities. Now, there is a difference between these two entities, right? So intercompany differences. Even these differences can be posted when he's eliminating intercompany transactions. So here we have consolidation monitor to perform group accountant activities. So when you go to the consolidation monitor, so we need to set the global parameters. So I'm removing this. I want consolidation activities for Europe group, Switzerland and France. Consolidation monitor. So here, Europe group, he has to perform all these activities. Sales elimination, sales against COGS elimination, profit on inventory eliminations, other income expenses in P&L, other income and expenses elimination, dividends elimination, right? So if you have any adjustments you need in the match, so for example, one of the intercompany transaction, user knows that intercompany transaction, but they have not tagged the correct trading partner. So they need some adjustments, so they can do the manual elimination, manual adjustments. So balance sheet. So I see elimination balance sheet. So when I run this 2042, for example, it's integrated with ICMR. So it finds out the differences and it will post to separate intercompany differences accounts. And after once the eliminations, all these eliminations, the group account, once he completes all these eliminations, then he is going to run the investments and equity elimination. So this investment and equity elimination, it's going to post first consolidation document because it is my first consolidation period. It's going to post first consolidation document, and also it is going to post subsequent consolidation for the first period. So you have an option in the first period. If you want to run only first consolidation, when you are defining the consolidation structure, you have to say first consolidation run at the end of the period. If you want to take for first consolidation, if you want to consider only opening balances and movements, you want to consider it as consider for the subsequent consolidation, then you can select the checkbox first consolidation based on the beginning of the period. Right. So if any divestiture, he can run the divestiture. And after running all these tasks, he can check the consolidation data validation. So all the consolidated data of once all these eliminations are posted, he can run this consolidation data validation, and he can check my balance sheet, its balance consolidated balance sheet is matching or not. So when you run, for example, if you run this, it will show you investment elimination, how the investment elimination happens, how the capital elimination happens, how the goodwill is calculated, how the minorities are calculated. You can see the log. Right. So this all happens here. With this particular log, you can see all those things. Now, once all this didn't see here, it's green and all the logs are generated. So once it is done, you have some reports. Those reports you can check your financial statements. You can check in that particular report. Let's see that report. So we have an app to check the balances, to prepare the financial statements under group reports group data analysis app. So your financial statements, P&L statement, consolidated P&L, balance sheet, you can prepare using this group data analysis. I already prepared. So let's say U00CY. So this is consolidated balance sheet. So you have rows, columns, whatever you want, whatever combination you want, you can select in the rows and columns. And you have filters. You can check whatever, if you want, you can restrict to the financial statement items. If you don't want, you can just remove it. It will show all the reports, all the financial statement items. And you can see you have something called posting level, which explains you what data reported. That means what data loaded from CSV files, what data they used for two-sided elimination. That means intercompany eliminations, and also it will show the data which is consolidation. 30 posting level, all eliminations. So investments eliminations, capital elimination, it shows 30 posting level it shows. And also you can generate cash flow. So here if you go to group data analysis with reporting rules, so just click on go. Sorry, it's wrong. So cash flow, changes in equity, comprehensive income, these three reports we can use this group data analysis with reporting rules. So you have to select the item hierarchy. So whether if you want changes in equity, you have to select that hierarchy. I want cash flow, I'm selecting this U00X2. Then it's going to show you the cash flow. So remove these FS items, document type. So we have something called reporting item. We need to add that reporting item in the rows. This reporting item, add it in the rows. Now it is showing the group consolidated cash flow. You can see the cash flow for each individual entities. You can check the cash flow for entire group. All right. So this is all about group reporting. So we just went through all overview. Now, next week we are going to understand all these. We are going to. So next week you can say that is the day one for the product training, and also next week we'll see how to implement a project. So for example, if you start a project, so what are the initial steps you have to follow to install this particular group reporting? What is the content you have to use? How to adapt that particular content, and master data, transaction data, and reclassifications, currency translations, consolidation, eliminations. All these topics we'll discuss one by one. Yeah. Any questions? So next week, whomever interested, just send an email to me. Right? If you send an email to me, I will send all the details. So coming Saturday, the first session, right? Please send an email. Whomever, so existing participant or new participant, just send an email so that I will add you in the distribution list. Yeah. Any questions?
Kiran sir, so is it possible like step by step like configuration, after that posting some entries, then after that showing the front end? Do you have the documents, sir?
That we will discuss in the sessions, right?
Okay. Kiran, I didn't join yesterday. What will be this like daily? It will be like it will be weekend and 1 hour on Saturday and 1 hour on Sunday, or 2 3 hours on
So
weekend kind of thing.
just send an email. I will send the demo recorded, right? I'll send the demo. It starts session time 6:30 p.m. to 8:30 p.m. India time. weekend sessions, Saturday and
Okay.
Sunday.
Okay.
Yeah. So I'm stopping the recording.